You know, the stock market will actually tell you a lot of things if you're just willing to listen, okay? And if we look at last night, Bitcoin denominated in the Japanese yen had already broken above this late February high. So we knew Bitcoin denominated in US dollars was already going to break above this February high. And if we knew Bitcoin in yen had already done something, and we knew Bitcoin in US dollars was about to do something, there's a good chance that Ethereum, that formed the exact same high, was going to do the same thing. So even without wave theory, you know, Bitcoin in US dollars has already broken above this high. We know Ethereum's going to break above this high too, okay? That's called follow the leader, okay? Ethereum completes an ABC correction, goes on a wave 1, then a wave 2, then another wave 1, then another wave 2. So in Elliott wave theory, the wave 3 target at minimum is the length of wave 1 placed at the wave 2 low. Okay, another way to get the wave 3 target is by taking the 126.8% extension of wave 1. We're going to be talking about that a lot in this video. The 161.8% extension of wave 1 is the wave 3 target in Elliott wave theory. I think it's very interesting that if you take the length of wave 1 and you place it at the wave 2 low, that gave you the exact same target as the 161.8% extension. So if we're thinking like these computer algorithms, they're really going to love 2,144. That's where Ethereum is heading next. Okay, what's going to happen when Ethereum reaches that level? Well, the next thing you do in wave theory is wave 4 is the 38.2% retracement of wave 3, and then wave 5 is at minimum the length of wave 1 placed at the wave 4 low. So I think if we kind of map this out for Ethereum from an Elliott wave perspective, it's going to go to the length of wave 1 placed at the wave 2 low. It's heading for 2,144. Then it's going to have a small pullback to 1,983. At minimum, it's going to go on another leg higher. This wave 5 higher is going to take Ethereum all the way to 2,407. Okay, if you're not interested in Ethereum, that's very good for future fintech. That's very good for NXTD. That's very good for EBON and all these Bitcoin mining stocks, all these blockchain stocks. Okay, blockchain, Bitcoin mining, those are some buzzwords that I would get very familiar with. Okay, let's talk about SPY right now. The S&P 500 is very clearly, in my opinion, going on a 5th wave higher. Now, there's some debate in the Elliott wave theory community. I'm going to talk about kind of my alternate count right now. I'm also going to say that XLV and XLY, healthcare and consumer discretionary stocks, are giving us a very clear picture of where SPY is going. I always like to say, if you want to know where SPY is going, you don't look at SPY, you look at components of SPY. Okay? So SPY completes a wave 1 and then another wave 2 low, and then it completes a wave 3 high and a wave 4 low at the very minimum. Now, this is an alternate count. If you say this is the wave 3 high and this is the wave 4 low, at the very minimum, wave 5 is the length of wave 1 placed at the wave 4 low. So at the very minimum, we're expecting that SPY will go to 406. That's the most conservative projection because that would be the length of wave 1 placed at the wave 4 low. What I really think is going on with SPY is that is the wave 3 high, this is the wave 4 low, and then we're within wave 1 of wave 5. Then we complete an ABC correction to put in wave 2, and then wave 3 will take SPY to 410 because that is the 161.8% extension. But the bottom line is that the most conservative projection will take SPY to 406. Okay? Now, that's not the most bold projection, but I'm going to get a lot of questions about this, so I'll just, preemptively say, I don't think that it's safe to assume that the stock market is going to crash when SPY reaches 406 and 410. Here's why. This rally from the election low was largely driven by oil stocks and airline stocks and bank stocks. Okay? A lot of stocks that normally outperform, like Apple and, Tesla and Home Depot and McDonald's, were mostly, sideways. I don't know if McDonald's normally outperforms, but McDonald's is in XLY, consumer discretionary, which I'm going to talk about in a second. But Amazon, right? Amazon's normally, a big winner. It's been sideways this entire time. Same thing with Facebook. The point is, this rally was largely driven by banks and tanks. Bank stocks, oil stocks, airline stocks. So let's look at some of those sectors right now. Okay. The bottom line is, I think SPY is conservatively going to 406. I'm going to talk about XLV, healthcare, and XLY, consumer discretionary, and kind of show how those sectors are going to probably be the outperformers next. And they're also going to do a much better job telling us where the market will go than SPY itself. So SPY's rally was largely driven by oil stocks and airline stocks. If we look right now, these oil stocks went on a wave 1 high. They completed an A, B, C correction to put in a wave 2 low. So we've had, if you're new to this channel, we've been talking about XLE and the airline sector for a lot in January and February. We knew that if you took the length of wave 1 and you placed it at the wave 2 low, we were conservatively going to go to 51. So if we take the low of wave 1 in Elliott wave theory, connect it with the high of wave 1 and the low of wave 2, that gives you your wave 3 target for the median of the pitchfork. Now, look, we have this gorgeous reaction where the wick of a daily candle perfectly tags the median of a pitchfork, and now XLE, the energy sector, is approaching the median of this pitchfork. So I think in shorter term cycles, we're going to see some resistance hit at the median of this pitchfork, and we're going to finally start to see some money flow out of oil, some money flow out of banks, some money flow out of airlines, and go back into the stay-at-home sector, the large cap tech sector, healthcare, and consumer disco XLY. Okay, so that's XLE. Just talking about how we should see some resistance at the median of this pitchfork. That's actually going to be an opportunity to see some money flow out of oil stocks, flow into the large cap tech sector, the healthcare sector, the consumer discretionary stocks like Home Depot and Amazon that have been sideways for a while. So that's energy, XLE. This is another sector that's done very well since the election. We talked about the airlines a lot. The airlines and cruise lines, the travel and leisure sector, the reopening plays have really done well with the banks and the oil stocks since the election. What I'm trying to say is that I think when SPY reaches 406, when SPY reaches 410, it's not really safe to assume that the stock market will crash if that is a resistance level. I think it's more prudent to think that if we look at healthcare and we look at consumer discretionary stocks and we look at large cap tech, which we're about to do, that we're about to see rotation from the banks and the tanks and the travel and leisure sector back into the stay-at-home sector, back into kind of the more usual suspect leaders like Amazon and Facebook that have been sideways for a very long time. So if we look right now at JETS, Jets, Jets goes on a wave 1 from this low. So what you can do is you take the 161.8% extension of wave 1 to find your wave 3 target. Isn't that very interesting that the bull flag that Jets formed from this low, where you take the length of the first leg of the bull flag and you place it at the low of the consolidation, also goes right to 28.79. So the point is, XLE at the median of that pitchfork is going to be a resistance level. Jets, JETS, the airline sector, is going to run into some resistance at 28.79. I think it's probably going to overshoot that and go to the median of the pitchfork. But the bottom line is that the oil sector and the airline sector and the banks, they've really led SPY during this rally. So I think instead of assuming the market will crash when SPY reaches 406 and 410, we should look for some rotation out of the airline sector, out of the oil stocks, and into the stay-at-home sector, into the consumer discretionary sector, into the healthcare sector. Okay, let's look at XLV right now. This is an extremely clean count. So I love this. This belongs in a wave theory book right now. This is a gorgeous, gorgeous Elliott wave count right now. What I believe is going on in XLV, this is healthcare. This is a picture perfect wave count. Okay, here's what I mean. This is wave 1. then there's an A, B, C correction to put in a wave 2 low. So what you do is you take the 161.8% extension of wave 1 to find your wave 3 target. Voila! Look at that right there. Perfect resistance at the 161.8% extension, confirming that's our wave 3. Okay, do you think human beings decided they were going to sell the healthcare sector at the 161.8% extension of this move? No, this was computer algorithms, okay? You're playing a computer game. This is not, oh, my cousins aren't buying SPY here, so I think it's going to crash. Computer algorithms are running the market, okay? And this is very clear right now. So we have wave 1, A, B, C correction, wave 2. Then wave 3 goes to the 161.8% extension of wave 1, and that's a textbook wave 3. Then this is even more pretty. There's an A, B, C correction to put in a wave 4 low, and the wave 4 low perfectly retests the high of wave 1. So what you do is you take the length of wave 1, you place it at the wave 4 low, and that's your wave 5 minimum target. So this was a 2.5 month run. I believe right now, if there was a dip in XLV below 112, that would be a great buying opportunity. I would have a stop loss below 109. This wave 4 low, I would be looking to ride XLV, the length of wave 1, place at the wave 4 low. XLV will be at 124 in the next 2.5 months. So I love this setup right here. Okay, I'll post about it if XLV goes below 112. It's a very nice dip buying opportunity. Okay, we don't short this, this possible dip below 112. Okay, you have cash to buy the dip. Okay, corrections in wave theory aren't guaranteed. You prepare for them so you can take advantage of them when they happen. Okay, wave 1, A, B, C correction, wave 2 low. Wave 3 is the 161.8% extension of wave 1. Then we have a textbook A, B, C correction where wave 4 retests the high of wave 1. The minimum target for XLV is 124. I'm looking to buy a dip below 112 with a stop loss below 109. Ride a run in XLV to 124. The healthcare stocks are going to do very well. I think what we're going to see is that this dip in the market that we had was really sector rotation into healthcare stocks, stay-at-home stocks, and consumer discretionary stocks. So this is XLY. A lot of people aren't familiar with this sector. Here are some stocks that are in this sector. The largest holdings of XLY, this is consumer discretionary, are Amazon, Home Depot, Tesla, and McDonald's. Right? A lot of those names have been sideways since the election. So what I'm trying to say is that I think we're going to see some rotation out of oil, some rotation out of airlines into one of these sectors that I really think is going to get some of that money is XLY, consumer discretionary. Okay? So this is a pretty wave count right here. Wave 1, wave 2, wave 3, A, B, C correction puts in a wave 4 low. So I really like XLY as a kind of a leading indicator of where this market is heading, almost more so than SPY. XLV to 124, I'm really going to be looking for that. I believe XLV will conservatively reach 124. I believe XLY is conservatively going to reach 177. Here's why. This is a wave 1 from this wave 4 low. Now, XLV, I'm looking to buy a wave 2 dip below 112 if I get it. XLY, I'm looking to buy a wave 2 dip below 160 if I get it, because the minimum wave 3 target is the 161.8% extension of wave 1. That's going to take XLY, consumer discretionary stocks, to 177. If we think XLV is going to 124 and we think XLY is going to 177, we're not going to be looking to call a crash in the stock market during that time. I think what we're really going to see, sector rotation into Amazon, sector rotation into Home Depot, sector rotation into Tesla. Okay? Always look for sector rotation on these red days. Look for the outperformers. This is a wave 1 from this wave C low. The 161.8% extension of wave 1 is 177. If XLV dips below 112, I'm looking to buy it, and I'm looking to ride it to 124 in the next 2.5 months conservatively. If XLY dips below 160, corrections in wave 3 are not guaranteed. I will never think about shorting a corrective wave. If we get this dip below 160, I'm looking to buy it and ride it for XLY to 177. I think this is going to happen in the next 2 months. Okay, this is a very short-term video. So this looks really pretty right here. The 161.8% extension of wave 1 is the wave 3 target. That's 177. Okay, so XLY below 160, I'm looking to buy that dip. XLV below 112, I'm looking to buy that dip. The bottom line is I think XLY and XLV are going to really serve us as indicators for the stock market going forward, especially this beautiful, beautiful XLV count. Okay, but XLY clearly a wave 1 from this wave C low. So if we got a dip to 160, that'd be a great buying opportunity to ride to 177 in the next 2.5 months. Okay, so if we believe XLY is going to 177, we believe XLV is going to 124, we're not going to look for a crash in the stock market. Okay, I think when SPY reaches 406, 410, what that's most likely going to be is we're going to see some rotation out of XLE, some rotation out of JETS, get back to the usual suspects, Amazon, Home Depot, Tesla, and Apple going to retake the lead. Okay, speaking of Tesla and Apple, here's Nasdaq. This is another thing that I'm really looking forward for in the stock market. The bottom line about QQQ is that this is clearly an ABC correction. Okay, this is clearly an ABC correction. So what I'm looking for is that there's no way, I really don't see a scenario where QQQ does not break above this high of 338. I really don't see that, okay? I don't want to get too carried away with my correlations, but, Bitcoin and Ethereum also put in a high in February, late February, sold off, they've already broken above this high. But anyway, this is clearly an ABC correction for QQQ. This is a wave 1 from this low. Now, we don't know for a fact that wave 1 is going to end at 319. If wave 1 doesn't end at 319, it could keep going higher, and then the wave 3 target is the 161.8% extension of wave 1. But the bottom line is that we already know that wave 1 from this low has been pretty substantial. The 161.8% extension of wave 1 is the wave 3 target. So in my mind, QQQ is definitely going to go to 333. That's only the wave 3 target. And then what we could see is that once this wave 2 low is in, I'm not certain that this wave 2 low is in, because if we look at XLV, I'm still looking for a dip buying opportunity below 112. I'm looking for a possible dip buying opportunity in XLY below 160. So if this wave 2 low is in, how I would map this is that the 38.2% retracement of wave 3 is where wave 4 would end, and we would take the length of wave 1, place it at the wave 4 low, and the bottom line is, at minimum, I don't see a scenario where QQQ doesn't break above this high of 338. So here's what I'm trying to say. SPY very conservatively is going to go to 406. Okay, I don't see a scenario where that doesn't happen, but I don't think it's prudent to say that the market will crash when that happens, because we see there's a lot more upside in consumer discretionary stocks. There's a lot more upside in healthcare stocks. I'm more interested to see, when will XLV reach 124? When will XLY reach 177? Let's look at SPY right now. The reason I say 406 is conservative is because this count right here, where this is a wave 1 and this is a wave 2, is more bullish than what the alternate count will be. The alternate count will say that this is actually the high of wave 3, and then we put in a wave 4 low. I need to make sure I can grab this. But the alternate count will say that the wave 3 high was made in late February, and then we just recently put in a wave 4 low. Okay? So they're going to say that's the wave 3 high. that's the wave 4 low. If that's the case, the minimum target, the very minimum target for SPY is the length of wave 1 placed at the wave 4 low. That takes SPY to 406. Now, 406 is a very important level. This is a pretty cool opportunity for education. I talked about this a lot in my last video, the 123.6% retracement. I just want to talk a little bit more about it. Let's look at some of these previous SPY rallies, okay? Here's a correction from this rally. If we take the 123.6% extension, the negative 123.6% extension of that correction, we get the next high, okay? So let's look right here. I'll clear up the 38.2% retracement. If we take this ABC correction, this is clearly an ABC correction, that gave you the exact next high by taking the negative 123.6% extension of the ABC correction, okay? ABC correction, negative 123.6% extension gets you the exact next high of 321, okay? Let's look at another big correction right here. Boom. If you see that this correction was perfect for taking the negative 123.6% inverted retracement to get the next high, okay? If you remember, a big reason that we were using 392 as a high that we were looking for, since December, since February, was not only because it was the length of this bull flag that we saw, but 392, more importantly, was the 123.6% inverted retracement of this correction right here. So this is our correction. We take the 123.6% retracement. 392 was not only the bull flag equal X target, it was the 123.6% inverted retracement of the prior correction that gave you the exact high, okay? 123.6% retracement, exact high. 123.6% retracement, exact high. So if we look at this entire ABC correction, remember how we just talked about 406 being a really important level, because that would be at minimum the length of wave 1 placed at the wave 4 low. Well, voila, that is also the 123.6% extension. So remember, if we say this is the wave 4 low, we take the length of wave 5 and we place it with the length of wave 1 placed at the wave 4 low is the minimum target for wave 5. So wave 1, wave 2, wave 3, and then the length of wave 1 placed at the wave 4 low is the minimum target for wave 5. It's very interesting to see that not only will the length of wave 1 placed at the wave 4 low take you to 406, but the 123.6% inverted retracement of the September sell-off is also 406. 406 is going to be a very important level for SPY, but I don't think it's going to be the top for the stock market. I think it's going to be a time where we see a lot of rotation out of the oil sector, because around that time these oil stocks will be hitting the median of this pitchfork, and I think that's going to be a time where we see a lot of rotation out of the airline sector, because around that time the airline sector, JETS, these travel and leisure stocks, are going to be reaching these important levels of 28 and likely the median of this pitchfork. Okay, so XLV, if we really want to know where the stock market's going, I think the most prudent thing to do is look at XLV, say we can conservatively take the length of wave 1, place it this wave 4 low. That's taking XLV to 124. XLY, very conservatively right now, will go to 177, because that is the 123.6% extension of wave 1. QQQ clearly has completed an ABC correction. I don't see any way to count this where QQQ doesn't make a new all-time high. So those are some things that I'm saying, bulls are in the clear to hold out for. Those are some levels that bulls are in the clear to hold out for. Now what I want to do is I want to talk about two setups that I'm seeing in the market. First, let's talk about some winners. Some Boeing. Boeing did really well. we see that Boeing, when I talked about it, it was in the low 200s. It goes on this massive run higher. A big way that we knew that it was going to go on this run was because JetBlue and American Airlines and Delta Airlines had already broken above this December high. So this was a wave 1 and a wave 2. This was a wave 1 and this was a wave 2. So Boeing, if you took the beginning of wave 1, connected with the high of wave 1 and the low of wave 2, Boeing had a very clear reaction on the median of this pitchfork. It went from the lower bound of the pitchfork, then it's going back to the median of this pitchfork. The length of leg 1, placed at the wave 2 low, took Boeing to 294. If we zoom out a little bit, we see that this was clearly a wave 1, so the 161.8% extension of wave 1 for Boeing is 307. So I think, Boeing bulls, they should do exactly what this user did. I was really happy to see, what I always do when I'm in a stock and I'm in options on a stock, I always buy an even number of calls. I see that you guys are learning. He said that he bought an even number of FSLR calls. He sold one at 100% up. He's riding the rest of it free. Boeing, I know for a fact, all calls on Boeing from when I spoke about it most recently are up at least 100%. So the idea is that a trader would sell half, remove the original risk of the trade, let the rest run. I think, where the best place to kind of, let this run theoretically is going to be 294, the bull flag equal legs target. It's going to be 307, the 161.8% extension of wave 1. That's going to be the median of this pitchfork. Okay? FSLR, another winner. We see that FSLR, I talked about FSLR a lot below 72. I know for a fact just about every call on FSLR is up 100%. So I've sold half. I'm letting the rest ride risk-free. And if we look right now, FSLR's wave count is that this is a wave 1, an ABC correction wave 2 low, a wave 1, an ABC correction wave 2 low. We're going to see FSLR go to at the very minimum, FSLR is going to break above this high right here of 112. That's going to be a very nice payday for me, and I'm riding it risk-free because I bought an even number of calls. I sold half up 100% to remove the original risk of the trade. Now, if we look at FSLR, this was clearly a wave 1. This was an ABC correction wave 2 low. If we take the length of wave 1 and we place it at the wave 2 low, FSLR has not yet reached the equal legs target of 112.89. So I believe it's very safe for me to hold my FSLR calls until 112 is reached at the very minimum. I actually think I'll be selling early, but that's going to be a fantastic payday for me. Okay, XPEV. I'm in XPEV as a long-term shareholder. I'm in Lordstown Motors also as a long-term shareholder, so I really don't care about the short-term price movements. But I know XPEV. I believe calls on XPEV are up 100%. I talked about XPEV below 30. I believe calls on XPEV are up 100%. So that would be another one. I chose to go with shares on XPEV, but if I had been in calls, it would have been buying an even number. I would be up 100% right now. I would sell half and let the rest ride. I'm in shares of XPEV. I'm an XPEV shareholder. Okay, but this is a wave 1, a wave 2, a wave 3, a wave 4, a wave 5, a large degree wave 1, W, ABC, X, Y. Wave W and wave Y are the same length. XPEV, I believe, is put in a very important wave 2 low. If this low of 25.27 holds, that's wave 2. XPEV is within a powerful wave 3. I think in the next 3 or 4 months, we could see XPEV in the 80s. But I am a long-term XPEV shareholder, okay? But, XPEV, that would be another one. Sell half, let the rest ride. I think, maybe swinging for 80 might be a good idea there. FSLR, I've sold half. I'm letting the rest ride to 112. Boeing, I've sold half. I'm letting the rest ride to 294 to 307. Palantir, I'm not quite sure. Palantir calls are up 100% yet, but this should be another one where it's wave 1, wave 2, wave 3, wave 4, wave 5. Large degree wave 1. ABC correction puts in a wave 2 low. This is going to sound outlandish to a lot of people, but this is our wave 1. If this is our wave 2 low, if 20.18 holds as a low, we have put in a very important wave 2 low. Palantir is going the length of wave 1 placed at the wave 2 low, Palantir is going to 56. That's going to happen in the next 4 months, in my opinion. Okay? So Palantir, XPEV, Fslr, Boeing, those are all, I got a good entry, sell half, up 100%, let the rest ride. Okay? I'm going to talk about one setup I really like right now. This is Jaguar Health. So we're gonna zoom out a little bit. I'm looking at Jaguar Health right now as a glorified options play. I'm not actually going to enter options on this. What I'm trying to say is I'm going to enter Jaguar Health shares Monday morning below 2.20. And I'm looking to say that if this low of 1.35 holds as the low, then Jaguar Health, JAGX, has put in a very important wave 2 low. So if we see A, B, C, the length of wave A has reached the length of wave C when placed at the wave B high. We got our reversal. I believe this is the wave 1 and this is the wave 2. 1, 2, 3, 4, 5. Wave 1, A, B, C, wave 2. If 1.35 holds as the low, I'm going to zoom out on Jaguar Health a little bit. I think this is a really cool opportunity for me personally, to get a really nice return on shares without options expiration risk. So you got to know what you own. This is damn near a penny stock. It's a SPAC. This is a high beta mover. But I think for me, this is going to be an opportunity to look at a 400% return potential without the risk of options expiration. So what I'm going to do is, if I get Jaguar Health, JAGX, below 2.20, then I'm going to hold this until the wave 3 high of 7.12, and then I actually think I'll eventually be able to sell Jaguar Health at 9. Okay, so if 1.32 holds as the low, I'm looking at Jaguar Health, JAGX, as a glorified options play where I can buy shares without the expirations risk, look to triple or quadruple my money. This is a higher risk play. Definitely not something I'm gonna throw the farm into. But this is a wave 1, and ABC correction puts in a wave 2 low. If 1.32 holds as a low, Jaguar Health, JAGX, is going to go to the wave 3 high of 7.12. The wave 4 correction would be the 38.2% retracement of wave 3. Then the length of wave 1 placed at the wave 4 low takes JAGX to 9.13. So I see Jaguar Health right now as an opportunity for me personally, just me, to buy shares of Jaguar Health below 2.20. If 1.32 holds as the low, I see this as a glorified options play where I can get a 400% return holding this until 9 without options expiration risk. Okay, I'm knowing what I own. This is a high beta, high risk play. I think for me personally, it's going to be worth it. Okay, so wave 1, ABC correction, wave 2 low. Wave 3 is the 161.8% extension of wave 1. That puts it at 7.12. The wave 4 correction would be the 38.2% retracement of wave 3. Then I'd be looking for another wave 5 higher, which is at minimum the length of wave 1. I'm buying Jaguar Health below 2.20. I'm looking to hold it until it reaches 9.